Coming up next, we have a view from the top segment moderated by Axios publisher Nicholas Johnston.
Thank you. Good afternoon. Nothing that we do at Axios would be possible without the support of our partners. The investments that we make in journalism, building that deals tracker, which Dan talked about earlier, events like this, all the snacks we've had today, that's all thanks to the support of our partners. So a huge thanks to Latham & Watkins for supporting BFD once again. And I'm very excited to welcome to the stage for our first view from the top, the Bay Area's managing partner for Latham & Watkins, Tad Freese. Tad, welcome to BFD. How are you?
Thank you. Good.
Let's start big picture.
Sure.
You talk to a lot of interesting people. You hang out in a lot of interesting offices. What is your view of the macro environment, I think, to start?
Yeah, I mean, it's interesting, and everyone's, of course, asking that question. Everyone's anxious. When is the IPO market going to open up? When are deals going to start happening in a big way again? And you're right, I talked to lots of folks about that. Very, very frequently. 2022 was a quieter year than 2021, obviously. We're starting to see a little activity, though, which is kind of good to see and interesting. Had a couple of successful convertible note offerings go out this week. We're going to see they were not in the tech space, life sciences, and a REIT. There's going to be a big tech deal that launches tomorrow in the convert space that I think will be interesting and a good bellwether. If these deals trade well, it can mean a lot. There's a couple of large tech secondaries that are going to markets willing launch next week. And so we're starting to see some activity, which is, of course, inevitably leading to talk of markets opening up more broadly.
Well, so what is underlying that? Why are you seeing that happen now?
I think, the markets have been stable-ish. We haven't seen huge gyrations up and down. Dow Jones has hovered in the 33,000 range for a while.
Right.
There's a sense that from the Fed that maybe interest rate increases have maxed out, although the April inflation data wasn't perfect. And I think people, to be honest with you, are ready. That's part of it as well.
When we talked last time, you used a phrase which is interesting. It's like people were waiting for the dam to break. Mm-hmm. So unpack that a little bit. Like, are you hinting that we're approaching that, or is this an easing, like a dam cracking as opposed to breaking?
Yeah, I'm going to guess it's going to crack first. I mean, there are, I don't know, probably a couple hundred companies that are queued up to go public, that cleared SEC comments, that are sitting around different stages of readiness at this point in terms of how their quarters have gone and what kind of growth momentum they are on. But there are a lot of folks sitting ready to go, including some very large, well-known issuers who you guys write about and others write about. Rumor has that a couple of them are going to push through this quarter or next quarter, really, if they see any window at all.
I mean, what are they waiting for? They're waiting for their lawyer to say, go?
I think they're waiting for a banker to say, we can get you a good deal and a successful deal that trades well, to be honest with you.
Right.
It's probably a little more stability. I think when it opens, there'll be some companies that are ready. There'll be some companies that aren't quite there yet.
When we had John Winkelried from TPG earlier talking about the broader macro environment, he gave a smart brevity answer to Primac, will there be a recession this year? He said no. Do you have a view on that and how that factors in?
It's interesting. I was actually speaking to one of the senior economists at one of the big bulge bracket banks just yesterday on this topic and other topics, and she's pretty bullish. She doesn't think there's going to be a recession. I don't think we generally think there'll be any meaningful recession, even if there is one.
Right.
I think the markets are eager to push through that. She also really felt that there was nothing fundamentally flawed in the economy right now. Very different than 2008, 2009.
Yeah. So on that macroeconomic, there's a bunch of people waiting. Can you parse out sectors that you see more ready or more interesting? Like, where is the deal flow most exciting?
So it's really big name companies that are very, past the point at which I think they were hoping to be before they go public. It is cross-sector. I would say software is probably not in quite the same place as some of the other sectors, just because as spending has been pulled back.
They're a little more victim to the macro.
A little more victim, right? As people have pulled back on discretionary spending, software spend has been less, so maybe a little less there. But certainly some of the folks in the internet space, I think we'll see take a run at it in the near term.
So, I mean, that seemed like a lot focused at the end of the deal spectrum. Are there interesting things you're seeing or trend maybe probably earlier stage? companies?
I think most of them are really waiting to see when the big guys go, and when they do, how they trade.
They'll lead the way.
They'll lead the way for sure. I mean, we've had a few very random opportunistic IPOs over the last 6 to 9 months, some big like Porsche, others smaller in the life sciences space. But I don't think you're going to start seeing meaningful flow until 1 or 2 of the big names get out and trade reasonably well. I think most of the software folks that I work with are really talking 2024 at this point.
Right.
But there are a host of others in non-software spaces that are really eager to see if they can't do something post.
So it's where you see the exit part of the transaction start to become more clear. That's when you see start farther down.
I think that's exactly right. And there's folks all along that continuum, like I said, who are ready, have cleared SEC comments. Most are updating for end of 2022 audited financials and all that good stuff. And so I think there will be a bunch of folks ready to go.
Waiting for someone to lead this parade out. Also, when we talked earlier, you talked about the role that boards play in some of this transaction space. I thought that was very fascinating. I want you to talk a little bit more about like how they are helping to drive some of these decision makings.
So I mean, some of it is just boards are getting tired, right? I mean, it's been a hard, pick your number of months, 12 to 18 months. And we are seeing, a little bit of fatigue and like, what are we going to do? Are we going to just push through and get this deal done? What is next? Obviously, if growth has stuttered or whatnot, you may have a hard time on the IPO path. But we're starting to hear and see a lot more conversations on the M&A side, which maybe is an interesting pivot. Folks who are like, okay, we've tried, we've waited. The resources are dwindling a little bit. Hard fundraising environment. Maybe we should talk about selling ourselves. And you talk to the folks at TPG, those and their brethren are definitely out sniffing around right now.
It's like they have a disposition to action. We want to do something, so let's find out.
We're definitely seeing that with some, and especially for companies where boards are worried that this year could be a down year. Like, do we just pull off the Band-Aid and head towards an M&A exit?
So, from your seat as an advisor on this, like, what do you tell folks? What's the advice you'd give to boards that come to you a little antsy, being like, we want to do something?
Well, I think it really depends. It's super specific to the situation, right? But I think for sure you got to get advisors in and talk about every option and what those options look like, and really have a very, very down and dirty conversation with your management team about what they're seeing and what they're thinking. I've also seen a lot of that over the last 3 months, where 3 months ago there were very rosy projections and they have slowly eroded, and that can lead to quick panic in a boardroom, right? Where the board's like, wait, what? I thought everything was okay, now it's not. So I think making sure you're having real conversations with your finance team, your CFO, your CEO, and making sure you understand where things are going is important. But then talking to advisors about what, how long can you wait? What are financing options? What does the M&A market look like? What might it look like in 6 months? I think those are all good things to think about, and there's not one perfect answer, obviously.
Well, then what are maybe brainstorm a little bit about what you see sort of 6 months out. What are trends you're looking at? Like, aside from the macro environment, like waiting for the dam to break, waiting for this IPO market to spin up a little bit. What are interesting things that you hope after that happens might be really interesting? Well,
I do think in the private equity space, right, it's hard right now. Interest rates are high, banks are nervous. The equity checks these folks are having to write are much bigger than they once were, a bigger percentage of the transaction. The LP market, interestingly, where a lot of these folks have turned, so the big PE players, instead of turning to lenders, are turning to LPs, large sovereign wealth funds and the like, they're also getting a little edgy. We've seen a couple instances of LPs pull out of deals relatively late in the process of late. I think all of this will stabilize if I knew the exact answer, I'd be sitting on an island, not sitting here talking to you.
Yeah.
But, at some point it will stabilize, and I think you will see a big pickup on the M&A side in addition to the capital market side.
A lot of this, it seems there's an undercurrent in all of this is just uncertainty. Sort of our financial projections are weird. The board doesn't know what's happening yet. We haven't seen people lead the way in the IPO market, and so we're waiting for that.
I think so, and human beings don't like uncertainty, and it's been a long period of uncertainty. But like I said a little earlier, we are seeing some signs of stability and some signs of positivity.
So in a horrible metaphor, in this uncertainty tunnel, you see a light.
Yeah, I think so.
One thing we love to do at Axios is end on one fun thing. A fun thing to ask a lawyer. What is the weirdest, most random type of deal advice you've ever had to give?
advice. I get asked all sorts of random things. I've been asked everything from, which couch should I buy to which secretary should I hire. But I think that
you don't give that advice. You demur on that, or you have a house
I'm
answer?
happy to give advice about just about anything. I think people view me as a trusted advisor, so I could ask interesting questions. I think the most fun was I was down in LA, and we had just signed up the sale of Lucasfilm to Disney, and we were flying back up here, and George Lucas had rented a plane, and he was talking to me about the fact that he needs to buy a plane, and it was funny. He was like, Marty has a plane, Steven has a plane. I'm like, I'm not an entertainment guy, I'm a tech guy, so it took me a minute to figure out. But his ultimate question to me, he had just gotten married, and he's like, if I buy a plane, my wife lives in Chicago, I'm probably going to need to buy her a plane. Do you think that her plane needs to be as big as my plane?
wait, what's the advice?
There's only one fair answer, which is, of course, it needs to be as big.
Or bigger, probably.
Or bigger.
A problem I'm certain all of us wish we had.
That's right.
That we could talk to our lawyer about. Tad, thank you so much. All of you stick around. We're going to do a quick 10-minute break and then jump into the last session of the afternoon, sprinting with a couple more interviews, and then we're off to happy hour. So stick around. We'll be right back.
Thanks, everyone.